All right, gang, welcome back to the live trading room. Happy Tuesday to you. Hope everyone is doing well. My goal is to get the days correct this week. Last week I was pretty off. Today I'm 2 for 2. George, yeah, thank you for joining from work. Again, if you get caught by your boss tuning in, do not blame us. Allow them to know that you did this on your own will. But thank you guys for joining. Also, good to be back on the live stream, right? We took about 2 weeks off for the emergence training event away from the live stream. But what we've been doing this year is we've been live streaming the first trading idea of the day, calling it my top trading idea. It's not always my top trading idea for the day, but it's one that I think is educational and informative, and giving the people over on TradingView and YouTube a chance to kind of dip a toe in the live trade room. Of course, if you guys want to join us, it's part of the trial membership. So hop in. There's a London room. There's a New York room. You can come and involve yourself in all of the discussion, not just the first whatever minutes. And of course, welcome to all of the new Tier 1 members that have joined. Good to have you guys. Excited to be a part of your trading journey. Just remember what we preach during the workshop, right? Take things slow, especially when you come here in the live rooms. You're going to see a lot of experienced traders. You're going to see a lot of analysis that covers a lot of different aspects of what's taught throughout the courses. And you're not expected to know it all at once. So don't feel overwhelmed. Don't feel depressed or disappointed. As I like to say, focus on your focus. So lock in on the specific things that you're currently going through right now. So if it's reading a price chart, if it's structure, if it's Fibonacci, and only focus on the aspects of the analysis that includes that. And also ask lots of questions. That's what I'm here for. That's what our members are here for. That's what makes our community the greatest trading community on the planet. Today's trade of the day. We're going to actually, this is rare. We're going to actually look at a trade that I'm in, right? I say it's rare because I do not like watching trades that I'm in because psychologically, it can be pretty disturbing. I actually just put out I've been sharing those little micro content pieces that I put out. I've got a bunch of like 1-minute clips that I put out on social media, taken from like videos and lessons, just kind of giving like daily hints and tips that hopefully people are listening to and using to kind of get like a little coffee shot in them to get motivated for the day. And today's tip spoke about a secret method that I use to help avoid psychological errors while in a trade. What do you guys think that secret hidden method is that only a handful of people know? Me and Dr. Strange. Nope. Although the trading plan could help you avoid psychological mistakes, but I'm talking about psychological mistakes after you're in the trade. So you've done the analysis, you've taken the trade, now you're in the trade and you're dealing with all those motions, right? All those emotions and the little creatures, the consciousness on your right and left shoulder telling you to do this and do that and get out and stay in and take targets, right? The easiest way to deal with the emotions that come with, we call it trade watching, because you will drive yourself nuts watching a trade. If you guys ever get a chance, you find it on YouTube somewhere, if it's still there, called The Angry Trader. It's a video, a short film featuring Darren and the consequences of watching a trade. But one of the easiest ways to get yourself out of that crazed kind of state is to, get away from your charts. Get away. Don't look at it, right? Once a trade is in progress, don't look at it. And I like to think about it like this, right? Is there any good in watching every tick of a chart or a trade while you're involved in it? Is there any point, right? Is there anything can you do? Can you stare at it and use your mind power to will it to go up or down? You can't, right? All you can do is drive yourself crazy. All you can do is drive yourself crazy every time it goes up a little bit and you get excited and you see more money. All you can do is drive yourself crazy once it goes down a little bit and you fear that it's going to hit your stop loss. So you're just going to rile yourself up. It's like when you got out of a relationship and then you see your ex with another person and you're just watching them, like there's nothing you can do about it. Like it's just going to make you mad. So just get out of the situation. So that's why I don't like to look at trades while I'm in, because again, I've been doing this for a very long time. But I am just a man. I am just a human, just like you guys. I have these same emotions, right? I think a common misconception is that professional traders don't have emotions. Now, in general, I'm very low on the emotional scale and I lack empathy, which is probably one of the reasons I've become a good trader. But I do have emotions. The difference is I've trained myself not to act on them. So I have them, I just act on them. And little tips like that help. So get away from your chart. But we're going to talk about the pound dollar here because this is a good trading opportunity. And I thought of George today because this is one where we have some inside levels of structure that are actually good for target taking, some closer inside levels and some further inside levels. But we're going to start with the overall analysis. So we're on a daily chart here. And we want to ask ourselves the question, where is price trading at? This is that IPDE thing that I mention every single day in every single video. If you watched anything from me, you know what it is. IPDE, identify where we are trading at. Would you guys say that we are trading at a previous level of structure? Right? Our most recent level of outside structure support in this case, right? So this is going to be a potential structure trade, right? But assuming you're not in it already, this is going to be a potential structure trade. We're coming to a level of structure. This is going to be a decision point. And the decision is up to the markets. If we hold, we can expect a little bit of a relief, a little bounce up, although we're dealing with a very strong dollar fundamentally. Again, just for you guys that are new, the dollar is the ultimate safe haven pair. So basically what that means is that when things are bad in the world, investors feel the safest investing in dollars. Does that make sense? Again, we're not fundamental traders here, but just we like to touch on the fundamental side every once in a while, right? Ultimate safe haven pair. So when things are bad across the world, people feel safe in purchasing dollars. So right now we've got China dealing with some stuff. Obviously, we got the war still going on. You're seeing dollar strength pick up, not to mention what we're doing with our own monetary policy, but in general. For how long? For the foreseeable future until something knocks it off. If that ever happens, who knows? Who knows? But the dollar is the safe haven pair. Yeah. And then if things are poor with the dollar, then people go to the yen. But we're at a decision point where two things are likely to happen, right? We're either going to hold and get a little bit of relief up, or we're going to continue to bust down, break through, and go to our next level of structure. The trading opportunity I'm interested in is in a hold. So I can see us at a previous level of structure on my daily. I'm going to go down to my 4 hour. And you can see we come down to the 4 hour. We have a few things that have happened here, right? Price has come down. I'm going to zoom in so you guys can see it, right? We've put in some very good candles, right? So a high Momo candle here, right? We had Friday was an interesting day. I still don't know why everything went crazy on Friday, aside from a few monetary policy conversations. But Friday was a ridiculous day in the market to end the week, catching people by surprise. We had a high momentum day on Friday here, and then we continued to trickle down. And then we started getting some very nice candles down here, right? We started getting some, although these are bearish candles technically, right? These are good signs for the buyers, right? Because we see the long tails to the upside. So prices pushed down, it got rejected, And it looked like we even had a higher high, higher close, maybe, right here with this doji candle. Now, if you were a very aggressive trader, this higher high, higher close could have been an entry reason for you, right? We talk about that as being one of our reasons for entry. Now, wasn't one that I was looking for an aggressive entry at, because that green line is at our structure. You can see that we haven't tested the lows of our structure. And that's something I need for that aggressive entry. So I waited for my secondary entry, which was a double bottom. And we got that this morning. I actually got it before I was awake. But I woke up to a double bottom, right? Can you guys see the double bottom here? This red candle, not the current one, this red candle was the one that confirmed it. So got a nice entry right down here at about 27.30s. Now, we know before we take a trade, we need all three things. We don't just need entries and setup, we need to look at entry, stops, and targets, right? Stops are pretty simple for me. I use ATR based stops, right? So I take the ATR, I get below the low of the setup, the double bottom, which was this wick right here at the time. We're pushing lower. And that puts us right down here at about 50. Let me just check what I was. I believe I was 53. 50, I was at 53. The ATR is actually, I think it actually puts us at about 56. I got down to 53. Give myself a little bit of safety because I wanted to get below that previous level of structure that we mentioned on the daily. Now, targets, this is the interesting one, right? Because this is going to be two distinct target levels that stood out to me, right? One level going to be this structure shelf right here. That is the main level that I would anticipate price going to, right? This is our previous level of support. If you are conservative, another level, and this was actually when I first started trading double bottoms. This is before I kind of fell in love with structure. When I first started trading double bottoms, double tops as more of a CTS trader. And by the way, speaking of CTS, I guess we should add the other stuff that happened with it. RSI was overbought or sold, excuse me. We did have divergence, right? So add to the CTS score there. But before I really fell in love with structure and really accepted it as the centerpiece of my trading strategy, all of my targets for double tops and double bottoms came at a 3D2 Fibonacci retracement from swing high to swing low. It was a very simple trading plan at the time. This was many years ago, but it came at a 3D2 Fibonacci retracement. So if you're looking for a conservative level of structure, that's going to be one as well. And again, if we look left, we have a few things lining up with that, right? So that 3D2 is going to come at this inside level of structure right here, this little chop. Obviously, the higher one, which I adjusted to the 618, is going to come at this previous structure shelf. And if you want to bring yourself some confluence, right? We've been doing this a lot lately, or by lately, I mean this year. It's been almost 5 months already, I guess. Man, time flies. We can take our volume profile. We could take a look to see if there's any significant spikes right here. You're going to see our biggest spike in this zone, this range, come right at the bottom of the structure support shelf. So again, I think this is going to be your best level. A conservative level would be your 3D2 right in here. The one thing that I did in mine, instead of just taking it right at this level, I adjusted slightly to that 618 Fibonacci retracement. 50 says the lows rather than the zone. Is that specific to the higher high, higher close? For me, it is. For me, it's specific. Yeah. So I need to see for an aggressive entry, I need to see a probe of the extreme level of structure. Now, is that specific to using a higher high, higher close entry in general? No, you can use a higher high, higher close entry at any part in the market. For me to be aggressive, I need to see a probe of that level, of whatever the extreme of the structure level is. But no, it's not, and you notice by now, Fitzy, there's no like, it has to be this, it has to be that. Like, that's not how we operate. You can use higher high, higher close in the zone. You can use higher high, higher close out of the zone. You can use higher high, higher closes in random locations. So it's not a requirement for a higher high, higher close. No. And again, if you guys are new in general, our style of teaching here is not, it's we want to have black and white rules for us specifically, but understand that rules are rules for us specifically. There's no one rule that has to be used across the board. So it's not like, hey, you have to do this or you're wrong, or this is the only way you can use this. That's not true in any aspect of trading, unless you're following a fully automated mechanical system. And if that's the case, it's fully automated already. So you can't really change anything unless you go in and recode it. What if it's 1 pip away and doesn't probe it? Then does it probe it or does it not probe it? Yep. And I should say this is a better word than probe, test the lows, because it can test. So test like the lowest low. It doesn't have to go past it. Test the lowest low in this case. But yeah, same thing as like, hey, if it's a Fibonacci retracement, is it a 618 retracement if it comes one pip before the 618 retracement? It's not. But here's the thing, right? We know that specifically in the forex market, right? We're dealing with different brokers. We're dealing with different price quotes. So everything works in zones. Structure works on zones. Fibs work in zones. Psychological numbers work in zones. So if you're someone that says, "Hey, I want to count one pip before the 618 as being the same as the 618," can you put that into your rule? And I got a good question on TradingView right real quick from Mark. I'll get to that next. But if price comes one pip before your 618 and it's close enough, can you create a rule? Yeah, just create a rule. Create a close enough rule. Like that's the thing you guys have to realize, right? Again, you are creating your own rules. If you want one pip to be close enough, then it's close enough. If you want 5 pips to be close enough or a certain percentage to be close enough, then it's close enough. That part really doesn't matter. The thing that matters is that you're consistent in doing it. So if you're going to create a rule that says, hey, if we get within 2 pips of a 618, then it counts the same as a 618, you just have to do that every time. That's the key. You can't do it sometimes and not other times. You can't sometimes be like, well, this time it's close enough, but that time it's not. Because that's an inconsistency. And that's going to be a decision that's made off of your personal opinion of whatever you want to do, right? If you want it to be a 618, then it's going to be at that time. If you don't, then it's not going to be it. So it's not the rule that is the issue. Again, you can make a rule for everything, right? For better or for worse, of course. The key is that you have rules, right? Having rules is much more important than what the actual rule is. Because if you have rules, now there's consistency in how you're analyzing the chart. If you don't have rules, then there's inconsistencies in analyzing the chart. So I don't want you guys getting caught up on, can I do this? Can I do that? Yes, you can. You can do anything. You can literally do anything. But you want to be consistent in doing it. Now, I got a question on TradingView. Mark says, is day trading worth it? Yes, if you're good. And that will be the same answer for trading in general. Day trading, swing trading, position trading. If you're good, yeah. If the effort and time put into it is worth the money that you get out of it, then yes. So it's like any investment in life. You're measuring what's my investment versus what's my result. So same thing like a normal job, right? Is it worth working a 40-hour work week for a salary that is under par? Well, no. Is it worth working a 40-hour work week for a great salary and other personal fulfillments? Yes. So trading in general, whether it's day trading, swing trading, the question of is it worth it is all based on what can you produce from it. And then to take it another level, with what you produce from it, does it outweigh the alternatives? Now, the thing about trading is interesting because we can't look at it as, and if you have a follow-up question, let me know. I feel like there may be something more specific. Excuse me, please ask that. Now, the difficult part about trading is when you ask yourself that question, we have to look at it longer term, right? Because if we're just looking at it as money, right? When you first start trading, you're probably not going to make any money. Would you guys agree? Like, you're not going to make any money for a very long time when you first start trading. That's just the honest truth. There is a learning curve of you needing to learn and you needing to develop. And then there's another learning curve of you doing dumb stuff and just being bad. Then there's a learning curve of you figuring it out. And then once you figure it out, you may start to make money, but you're still not going to make that much money, right? Especially if you're someone that's not starting off with a very large account size. So the interesting thing about trading and is it worth it is you have to look you got to look at it two ways. You got to look at it in percentages first and foremost, and you got to look at it long term, right? And the reason you have to look at it in percentages and not an actual monetary figure is because that actual monetary figure is always going to be subpar at the beginning. But just like any investment, you're looking at what it's going to be bigger picture. So let's say you are someone that produces 40% a year in your trading, right? And let's say you're starting with $100 account, right? $100 account, and you made 40%. You can look at that two ways. One, you could be like, man, I made 40% a year. I think we'd all be happy with that. Well, maybe not. I'm speaking to there's some people watching on the regular internet right now, and they're going to think 40% is ridiculous. Anybody that knows anything about money would be happy with a 40% return a year. Am I right? Would you guys agree? If you know anything about how money actually works, you'd be quite happy with a 40% return a year. There are some people out there that'll be like, well, Keel, if I can get 40% a week, it's not worth it. Yeah, won't even waste money or waste energy addressing that. But 40% on $100 account, you've only made $40. So one could look at it and say, 40%, man, that's amazing. That's great. And then you look at $40, you're like, that doesn't really change my life. So what you got to do is look big picture, right? Because in trading, you should be somewhat consistent in your return on investment. So that percentage number. And you have to think about what that percentage number is going to equate to once your account size catches up. So you got to think, and it could be depending on how much you hustle, how much you have, how much you can invest. You got to think about, okay, well, I'm making 40% a year right now, which is great, but it's only $40. So it's probably not worth my time if you just think about it from a full monetary perspective. But I got this 5-year plan where I'm going to pick up a second job, or I'm going to reduce debt. I'm going to start flushing some more money into my trading account. And now I'm going to try and grow my account to $10,000. Well, now all of a sudden, 40% on $10,000, that's a different story. All of a sudden, 40% on $20,000, $30,000, $50,000, that's a different story. So it's difficult because you have to think really long term with anything that's an investment. But you got to think really long term as far as if it's worth it. And the easiest way to do that, in my opinion, is just think in percentages, right? Understand what your percentages are. You can know that from your back testing, or have a good idea from your back testing. You won't know it until you get some actual years in the trading. And then once you get that percentage and you kind of know what your range is, where do you lie? And it should be somewhat consistent. I've been pretty consistent for the last, I don't know how many years, aside from like this one. I've had really good years. I had some poor years that are kind of outliers. But aside from that, it's pretty consistent in my return. So I kind of know what to expect each year, which worked good for budgeting. But once you kind of know what you expect, now you can do the second part of your plan where it's like, okay, well, how can I flush as much money into this trading account as possible so that I can maximize that percent as soon as possible? And then it's all compounding after that. But you got to be patient and really make it like a 4-year plan, a 5-year plan, maybe a 10-year plan, depending on, what your situation is. And that's going to be the only way that it's worth it. So look at the percentage, look at the long-term picture, and then look at the effort and time requirement that is needed to make whatever that return is. And that will answer your question. Let me know if that helps. Real quick, YouTube got some questions before we shut down the live stream and get back to the rest of our stuff in the live room. I don't know why I don't want to look at this. Oh, I meant to mention this as well. This is a good example too. We haven't talked about this in a while. Have you guys ever heard of the Graceful Exit strategy? It's a part of trade management. I don't personally use it, which is why we don't talk about it too much, but it's worth bringing up. So a graceful, we talk about trade management typically in the form of active trade management. It's like trailing stops, right? When things are going your way, that's the fun part. Another trade management tactic could be kind of saving face on the trade. We call this the graceful exit. So basically the graceful exit gives you an option, right? A rules-based option to exit a trade early for a loss or break even, I suppose. Now, again, the difference of this is it's rules-based. It's not just like, oh, I feel like this is going bad, I'm going to stop myself out. Perfect, Mark. Thank you. Glad to help. It's rules-based. It's not just, hey, I'm going to make an emotional decision. It's rules-based. And essentially the rule is this. When your technical analysis shows you that the reason for you being in a trade is or has been invalidated, you now have the option to exit trade in many different ways. You can exit at market for a loss. You can say, if we get back to break even, I'll take stops out, whatever rule you want to implement there. But a good example would be here. So the trade was taken because of the double bottom, correct? Now it is because of the double bottom and structure, but the actual reason was the double bottom. If the double bottom is violated, right? If we get a lower low, lower close, we got an hour and 4 minutes. But if we get a lower low, lower close below the double bottom is violated. If the double bottom is your reason for expecting a long, and now that reason has been violated, if you're someone that uses the graceful exit, what you can do is you can exit right away. And instead of taking a loss down at your normal stop loss, you take a much smaller loss right here. Now, many pros and cons to doing it. I do not use the graceful exit for psychological reasons. I'm not a fan of it at all. But it fits people differently. But that's something to consider if you're someone that wants to maybe look for a tactic to cut losses. Now, real quick, questions on YouTube. Don't want to leave you guys alone. Trading is life, but life is hard. Amen to that. Solid descending triangle has been tracked. Solid descending triangle. Been tracking this for a couple weeks on my paper account, says Gilbert. What time frame are you looking on for an ascending triangle? Descending triangle, Gilbert? Was it this one? This one up here? That's my guess, but let me know. I know there's a little bit of a delay here. Billy says, have you ever discarded a system as not worth it after extensive back testing? And what is the turning point? Yeah, all the time. All the time. I can't count how many strategies or systems I've discarded because they just weren't worth it. Yes. Many. But that's the process of strategy development. I enjoy kind of looking for new ways to trade and trying to build new strategies. I think it's fun to a point. It's very frustrating. But the truth is that you're probably going to fail, just like Einstein, right? You're probably going to fail 100 times just to find that one thing that works. Good descending triangle, Gilbert. Yeah, nice. That's the truth right there. Is in strategy development, you're probably going to try a million things. Most of them are going to fail or not work the way you want it to. And then you'll find that one thing that worked. And the cool thing about it is when you find that one thing that works, if it's good, you can trade it forever. And then you go back to the drawing board of trying a million more things. So yeah, definitely that should be an expectation in my opinion. Some things won't work. Some things just won't work to your liking. Some things just won't work good enough, right? We have systems here that I've traded that are profitable, but it's not profitable enough to be worth my time. Like the alternative, I have better alternatives. So it's just like, hey, it works. It just doesn't work that great. So we'll do something else. So YouTubers, trading viewers, thank you for joining. I'm going to boot you out now. Before you leave, do me a favor, hit that like button. We're back on the live stream every Tuesday, Wednesday, and Thursday here at 7:30 New York. So make sure you join. Make sure you tell your friends. Subscribe if you're not subscribed already. Live room members, you have any questions about pound, dollar, and